Thank you, Chair. And I'd like to make a couple of preliminary comments first. First of all, I'm here to learn. I'm not an expert on this Reserve Bank. And I see that my role is to serve the people of Queensland who I represent and the people of Australia who I represent. So in order to serve them, I need to understand more of the drivers. I'd like to also put on record my thanks to the government because Senator Cormann undertook to answer my question as to the availability of the Reserve Bank at Senate estimates last time, and he has done so. It first started for me back in my very early days in the Senate asking about the Reserve Bank attending, and I was given some strange answers, but it's good to see the Reserve Bank here. Now, the Reserve Bank is paid by taxpayers, or sorry, the officials at the Reserve Bank are paid by taxpayers to serve the people. It's late, so I'm not going to have a long list of questions because I don't think that it's appropriate for this late, but so I'll put some on notice. But sure. Could you tell me, please, where you fit in? Because there are so many regulators, I get alphabet soup in my head. APRA, ASIC, ACCC, Reserve Bank of Australia. Where do you fit in? What's your role in regard to those?
So from the financial regulatory side of things, then we're responsible for regulation of the payment system, which includes things like credit and debit cards and the like, interchange fees on those, so issues around payments. We also have a mandate for the oversight of the financial stability of the financial system as a whole. That doesn't come with any regulatory power. So as a financial regulator, it's mostly confined to the role as regulator of the payment system. So the Governor also chairs the Council of Financial Regulators, of which those other agencies and Treasury, the other agencies that you mentioned and Treasury are members of. But that is a body which is primarily about exchanging views on the financial system. The individual agencies that you mentioned are the ones which have the individual regulatory powers.
Okay, so you're an overseer, coordinator, rather than a policeman or a regulator?
With the exception of the payment system regulation.
Yes. Okay, thank you. And your role has a lot to do with doing economic assessments, the state of the economy, knowing which levers to pull.
Well, yeah, although we mostly...
You've got limited levers.
We have one. So we're fairly comfortable at knowing but yes. Yes, it's a directional issue, but basically not a choice issue too much on the lever, but yes.
Okay.
That's
coming down to some specifics, you said the effect of lower interest rates has increased cash flow for borrowers, and you also went on to say when we lower rates, people borrow money. That's one of the channels of monetary policy.
Yep.
Now, there have been hundreds of stores closed recently, from Harris Scarfe, EB Games, Curious Planet, Jeans West, Ed Harry, Red Rooster had lost a franchisee who had 7 stores, Crinity's, Dimmy's, Bose, Roger David, Ishka, which has 30 stores Australia-wide, Topshop, and even Myer closed 100,000 square metres. With credit card interest rates from the big 4 banks being 21.5%, everyday Australians are struggling to pay off their purchases, let alone make new purchases. So your charter includes economic prosperity, as I understand it.
Yep.
So these interest rates are really on the Reserve Bank. Has the Reserve Bank considered asking the banks to reduce their credit card profiteering so people have more of their own money to spend to keep our remaining retailers afloat?
No, we haven't. We control the cash rate, which is our instrument of monetary policy. How the banks set their lending rates above and beyond that, we don't have control over. I mean, you had Rod Sims in here a minute ago, who's looking at mortgage pricing. I'm not sure off the top of my head whether the ACCC have looked at credit card pricing in the past.
I'd be very surprised if they haven't.
Yeah, but anyway, as I said, we have control over the cash rate. How the banks set the rates above and beyond that is not within our control.
So do you know why credit card interest rates are rising? Because they were, not so long ago, about 18.5%. Your cash rate has decreased quite substantially, and yet credit card interest rates have increased, and nominal rates are falling, and yet credit card rates are increasing. And we're in what, perhaps you can correct me if I'm wrong, a retail Armageddon, so we need some stimulus. And wouldn't cutting credit card interest rates help that?
I really, I'm happy to let Dr. DeBell try and, answer it, but I really think it's outside the remit of the Reserve Bank, Senator Roberts.
I think the main basically similar to the answer, but very similar to the answer I gave Senator McAllister, the main driver of what allows households to buy stuff and buy retail goods is actually their income as much as their capacity to borrow on their credit cards. I mean, people are actually using their credit cards a lot less now than they used to. The stock of credit card debt's actually has been going down. So it's so the main driver of what allows people to spend money in retail stores is really their income. That's the thing which has the first order impact on their ability to spend.
Thank you. In an interview in maybe October, maybe November, according to Senator McAllister, 2019, Reserve Bank Governor Philip Lowe indicated that the trigger for unconventional monetary policy would be interest rates falling to 0.25%. Now, the interest rate's just been cut to 2.5%. Will the Reserve Bank be implementing quantitative easing the next time interest rates are cut?
So, as you say, we think we've got the capacity to reduce rates one more time in terms of by 25 basis points to 0.25. I think that is the case. At that point, beyond that, if there is a need for further stimulus, then we would have to consider a number of the things that the Governor talked about in his speech next November. So yes, you are correct in pointing out that we have one cash rate reduction remaining before we get to 0.25. Yeah.
What would some of the alternatives look like? Printing money, buying bonds, buying securitized mortgages? I'm not a financial expert, so...
Well, as I said, the Governor went through a number of the options in that speech. We haven't changed our assessment of those options. We don't think negative interest rates are something that we would be contemplating. So that's one thing that other countries have obviously implemented. We don't think that they would be appropriate in the Australian context. I think general strategy, should we so require it, would be to probably try and pull down the risk-free rates in the economy, the government bond yields in the economy, lower them a little lower than what they are at the moment, noting that they are at historic lows even today. So that would be the sort of things we would potentially be thinking about should we get to that point.
Okay, I was going to ask you about negative interest rates, but you've already said that that's unlikely. But in reality, with inflation at around about 2% and nominal interest rates at 0.5%, doesn't that mean negative real interest rates?
Yeah, so the Australian economy has had negative real interest rates a number of times in its history.
Yeah.
Through a decently large chunk of the 70s, if not most of the 70s, real rates were negative. So that's not an unusual set of circumstances either here or anywhere around the world.
Okay. I have a lot more questions, but as I said, I could put them on notice. In the interest of giving other people a fair go, I'll stop right there for now.